Okay, I'm going to take a look at Microstrategy because for me it's at a really key level to see which way we go next. Let's talk about how we got here because the really nasty sell-off that we've seen in the last 24 hours has been because we've got a looming US government shutdown after the Trump-backed bill to raise the debt ceiling kind of crashed and burned. So in America, every time you want to borrow more money above the debt ceiling or make the debt ceiling higher, the whole government has to vote on it, and the Republicans in the House don't seem to support the Trump plan. And that, I think we also saw that with the Fed decision this week and the dot plot, where they raised the plots and are thinking that the Trump government or administration is going to be a little bit more inflationary because he wants to get rid of the debt ceiling completely for at least 2 years. He calls it ridiculous, and so, which means he wants to spend more than that, which means of course that it is inflationary. So let's talk about what could move the market, because the plan B, which was the Trump-backed plan, failed in the House. And so they've got 24 hours today, so not less than 24 hours, because at midnight, if they don't have a new plan, then the government shuts down. That doesn't mean it completely shuts down, but it does mean that 4 out of 10 government workers get laid off without pay. And they have an account, obviously, with money in that they can spend, called the Treasury General Account. Normally, when the government is spending the Treasury General Account, it kind of increases liquidity. And so, the market is not going to run dry. We're not going to run completely out of money. But until this gets resolved, and of course, this is a holiday season next week and the week after with Christmas, New Year. It's really kind of a bit of a stressful time for this. But that does mean that if they do come up with a solution today, we could see a little bit of a monster rally in risk assets because of it. Or a pretty nasty squeeze higher anyway, and the bears get run over. I personally think it's pretty unlikely that they would agree to that under so much pressure, but I never say never. So pay attention to the news and what's happening with the debt ceiling, because that's kind of going to be key. So for me, let's take everything off this chart. In MicroStrategy, I think that we're in a big fifth wave that started here in August, or that we have potentially done 5 waves up, or potentially we're only in a wave 4. Now, if we're in a wave 4 from the slow on the 6th of August, 5th of August, I would look for a 50% retrace of this swing and a kind of measured move back. And I would also expect the daily 50 moving average, which is just down here at 312, to be support. Is it 312? Where is it? 314. So if I put my fibs on from this low to high here, we can see that we are back at that 50% level. We are almost back at this daily 50 moving average. And if I measure the swing, so let's take that away. If I measure from this high to low, and here we've got our 3-wave rally in the middle, and I project it from here, we've got 3 waves, and here we are. Look, let me move this so you can see. So when you do measured move swings, your first target is where you are 61.8 of the first swing, so that's here as well. And if we get underneath this then important support zone, your second target is the equal measured move, which would be down here at 240. Now, market doesn't open for another 40 minutes. You can see in the pre-market, here we are sideways at this level, 325. We've been underneath it. And a lot of people I know are expecting this gap to get filled. We went down and we tested the top of this gap in the pre-market. I have to say, though, that gaps that don't get filled pretty quickly can be resistance and support the ranges of this for quite a long time. So that kind of is where we have bounced from in the pre-market. So if we were to overshoot, make a long tail, and then bounce back up and close above this level, this top of the gap would be where I would look to hold. I really wouldn't want to trade intraday underneath that. If we do, I think we continue lower and we continue next to the equal measured move, which is down at 240, and potentially lower than that, all the way to the 200 moving average at 185. But for now, this is a really kind of combination of, you know, a 50% retrace, a measured move, a daily 50 moving average. This is a whole bunch of, you know, pretty interesting support. If we get underneath it, if we overshoot down into this gap, then I would expect this to be a level that you sell against for another swing lower. You know, it's a really kind of bull bear decision line. And so that comes in between 318 and 318 really, and sort of 320 is the key decision level that I'm looking for in Microstrategy. And yeah, it's one of those days where what the government does could make a difference. Again, I'm not hopeful. If we have a really nasty continued selling, I would look for this level to be resistance, and we continue to 240, which is quite a lot lower than where we are now. But for now, 318 is a really big deal decision level.